Well, let's make that actually take out the low. I really hate this magnet tool because it just doesn't do what it's supposed to do. So we know we respected this liquidity block. So respecting this liquidity block knows that, not knows, but gives us the framework that we can anticipate price to respect this low, respect it, potentially move away. So we also respected this inducement high. This inducement high being why? Because from high to the low here, we induce sellers. So sellers are going to want to start selling in these regions, from your typical SMCPOY, supply zone, whatever you want to call it. So if we dissect this price action, we see we trade into this area, and then we move away. Move away meaning we take out some sort of internals taken. We also have some sort of LB here that we're respecting. So we respect this area at the lows. So once we do that, that induces sellers into the market and it traps the early buyers. So since we trap the early buyers and induce sellers, now we can anticipate that we have engineered liquidity above here. So this whole move from here to here, that false sell-off is what we need to build liquidity for a potential target in the market. So engineering liquidity, cool. So what we do now is now we have a bullish bias. Now we should be looking at ways that we can buy this market whenever liquidity is taken in our favor. So in the scenario, you could buy here, but here's what we get from this previous week's price action. Trade above here, inducing buyers. Make this one as possible. So buyers induce, they want to be buying from this area. We do not. We want to see those areas trapped. So liquidity gets taken. Now we can buy aligned with the trend. So notice how we get this build up area here. So we build up here at this area before we sold off. So we know that once the low is taken, we could potentially have some sort of build up whenever we trade back into this area, resistance, however you want to call it. So we go to the lower time frames, dissect this. What happens is we trade into this area here. We trade into this area, respect that, have a reaction, and very intricate. Look at what we do. So what happens is we respect these lows first, and notice how it takes out this high. Your average retail trader or any other strategies we've learned in the past, that's a BOS in the market, we'd see that as a change of character, however you want to call that, just that little spike up. And notice how we have that like build up of price action. Like we're on the 1 hour, but obviously if you go to a lower time frame, you'd see this as sort of a build up. So we trade into that area. We come in, we don't take the low yet. So now what we also do is we move away. So here's that reaction that causes a build up. We respect it, move away, inducing traders to get long in here. So we take out this high and also the high that we got the reaction off of. So we do that first. So since we do that first, now that lets you know that, hey, okay, there's liquidity below here. We want to see this area taken. Area gets taken, that's our inducement low. So I didn't see any sort of liquidity block to take any direct entries from. Even if I go to any lower time frames, I can try to justify this entry for you like this sends out an end of day markup on this price action. I can't justify myself to take an entry because I see this. Me personally, I would have wanted to see price below here to give me a real distinct liquidity block. Because if I'm looking at it, we do this, right? All this is basically trading into that. So it's not any form of we take the low. So therefore, no direct entry for me on this price action. So there's no direct entry. We spike below liquidity. Now we're trading in the aligned direction. Sellers induce. We start trading higher. No sort of confirmation entry in here. No sort of confirmation entry. Apologies if it starts getting laggy. I actually don't know how to fix that. I guess it's just my OBS or anything, or I have too many applications running. So we trade higher. Nothing significant in this price action. So we take the high. So therefore, we take the high that we're reacting off of, taking the inducement high. So that induces buyers. So the reaction that we had from this area that gets taken. But we are still in the bullish bias because we've trapped these buyers here. So since the buyers get trapped, we do not want to be selling in any of these areas. Any of these areas, all these areas are being restricted to generate more liquidity in the market for us to target in this specific scenario. Sorry. Okay. Can you start higher time frame daily or weekly? How do you dissect price? Um, Even in my previous webinars, I've done this. I've also done this as well. I mean, there's so many webinars that we go over price from a weekly down, you know, scale. So I mean, there's endless content that shows you how we dissect price from a higher time frame standpoint. Selling into the inducement low. Yeah, so since we taken out this high, right? Just because we taken out this inducement high doesn't mean that we need to look for an immediate sell. Because now, remember what I said, how we've trapped buyers from here. And look at how we're reacting. Look at this price action here. I get it. You can say, we've traded above this high and that should be LB. Yeah, but now we have to use logic in a sense because that would just be us looking at this scenario as a pattern. So therefore, we're reacting off of this area that caused price to sell off from. So that caused this to take the low. Therefore, if we're looking at it from a higher time frame perspective, we sold off. We want to see price above here. We want to see price above here because all this price action is here is a liquidity buildup. So like how we always draw again, I can draw it in this specific scenario. Boom. We have liquidity above here now. Buyers trapped. Yes, whenever we come above here, we could potentially see, false reaction since we took the high. We could potentially see something like this, but it doesn't always happen like that. That's just a clean, that's just an ideal perspective. The market isn't always perfect. It's not always going to show us what we want to see ideally. So that's why we have to apply logic to this specific scenarios. So that's why selling and whenever we get above here, it's just not the most probable. Why? Because we could always leave this low intact, We could always leave this low intact, take the high. I've seen it happen multiple times. And it's happening right now on NQ. If we look at it from this perspective, let's clear this drawing so I can show you. So we've taken this high. right? So notice how we just taken this high, but we didn't take the inducement from the left in that scenario, right? So let's move this actually. I'm trying to make this as clean as possible. Okay, cool. So notice how we taken this, but we still haven't taken this area here. And now we're having this sell off. So you see how we leave the highs intact and we have this sell off here. We have liquidity at the lows to target, yes, but we didn't have any sort of build up here yet. There's no reason, there's no reasoning to sell here because we didn't induce buyers. Buyers haven't been induced yet. We haven't showed any sort of buildup of being respected. All we had here is just a reaction and a move down. This doesn't really indicate anything as far as us to do anything else. So in this specific scenario, it's kind of hard to dissect where NQ should go because yes, you can say, yeah, we took out these highs here. We can now see downside, but in any case, we could also see this price action get respected here, and then price move all the way to the highs, finally taking these highs. Then that would be sufficient enough liquidity to comfort these lows. So it's a tough spot. It's a really tough spot. Like that's why we can't really anticipate these engineered liquidity moves. That's why we say it's high risk because you won't know. You won't know until price shows intent by taking these areas. So if we were to say price takes this high, now we should go bearish. It's just speculation at that point because no form of liquidity is taken in a sense where it's significant. Because if you look at the higher time frame, daily, yes, you see buyers induced here, you see a BOS here, but the liquidity to the left is not taken because all we did was we respected this area here, respected that daily inducement high here, sold off, respecting this low, trade up, and what you could potentially see here is price take the low, maybe come lower, respect that, trade up, and it's a hard, in my opinion, it's a difficult scenario to try to anticipate which liquidity point is going to get taken first. So that's why I would tread lightly on NQ. That's why Marco says he stay away from trades like that. Yeah, because honestly, you can't put the same risk that you would put on normal trades that you would take that are pro trend that follow the system that you would on these counter bias or these setups that you're anticipating price to engineer liquidity from. Because how would you know in a live market scenario? How would you know that this high would hold after we've done this? How would you know that this high would hold after just taking this high and not the high above? You just don't know that. Price action we get on Friday. So Friday, all we did here, I think there was something in London. Let's look back. So we did here, we come here, we take out a high. Not nothing really significant, but price stops at that point. We trade back into this low, and then we trade higher again. That lets me know, okay, now we have liquidity below this low. We have liquidity below this low because we trade up, respect that area, trade back up. So from a diagram perspective, you know, basically you're just, oh my God, I hate when that happens. So basically just boom. So respect the low, quickly below that low. We need to see price trade back into these areas to have some sort of build up, boom, something like that in a perfect world. So what we get, price takes out an internal point, trades higher. So even though we take out an internal point, we let us know that, okay, we've induced sellers. So therefore, price takes out this high, but in any case, we still have liquidity above here because all this is price respecting this high and selling off. So notice how we have this price induces sellers there, trades back into this area, and induces sellers again. So basically a build up here. So we take the internal, but we don't take the external. We still have a build up above here. Price left these equal highs for a future target. Look at this. Look at this build up of price action that we get before we take the high. You do not want to be trading in line with this. You do not want to be trying to buy this price action. Price is just leaving liquidity for it to get taken. And look at how as soon as this internal gets taken, you start to ride for all this liquidity. So price respects it one last time before taking out the lows. We take out these lows, trapping buyers. We still have a liquidity point above here to potentially target. So since we took out those lows, and we also taken these lows to the left that prices reacted off of. Very intricate. Look at this. So we take those lows. You would argue and say this price action is the reason why price built liquidity to the right hand side and induced buyers, because this is just a general representation of retail getting in this market off of these POIs or these demand zones, whatever they used to call it. So we get this reaction off the back of this price action here. Traders get induced, return back, induce again, just build up a price action, traders get trapped. So now there's a reason for price to go higher. Why is there a reason for price to go higher? Because now we've trapped these early buyers on this internal point. So now we can also induce sellers here. So now when we see that, there's no reason for price to come to this low yet. Why is there no reason for price to come to this low yet? Because there's no liquidity that's been built at these lows yet. Why? We've taken an internal point. We can see price move higher now. So now that we know that we can see price move higher, we know that you can trade aligned with that bullish bias. So until price would take this high, there would be no more bullish setups. So once price would to take this high, you wouldn't be looking for any more buys. So once price would take this high, then there would be liquidity generated at this low. But since it hasn't done that yet, no liquidity below that low yet. So you have an inducement high. That's what happens. Do I need to see price respect the area where sellers were induced from before taking liquidity to make an inducement high? Do I need to see price respect the area? If you're looking for a sell, Dan, I if I understand your question correctly, let's do a diagram. So you want to see something like this happen to make your inducement high valid in a sense. So picture we're respecting lows to the left. So even though this has induced sellers, it doesn't mean anything because there's still lows to the left to target. So what you're saying is you want to see. Oh, I'm sorry, I drew this completely. I drew this completely. Let's say this, and then we trade above here. Is that what you're trying to say? You want to see this get respected before you take said and do some high trade. Yes, it's more probable to see, you have some sort of build up at the inducement high. But like I've been saying in these webinars, you need to see this low get respected. Like basically the structural low. If this structural low gets taken, like for instance here, I don't want to be taking this sell because although we've taken the low but haven't taken the inducement from the left, there's still a possibility price can do this and then take the lows. So I like to say from now on, like high probability reasons, I like to see this thing respected. If that sort of answers your question about taking the sell above here, yes, I like to see, you would rather see some sort of build up happen here, more probable, instead of just seeing price just run to the low and then take the high. It's easier to spot, in my opinion. Or sometimes just, or sometimes you just choose BOS from a candle wick or high rather than choosing swing structure points over time frame. A specific rule when you choose wicks or when you choose swing points. Okay, so it's not that I choose it. It's if you look at price. If you look at price, right, you have to really zoom in to see these things. Very, I know that it could get very intricate. Like, look at this price action here. What do we do here? You're, I'm basically looking what price is reacting off of and how it's moving away from these areas. So notice this price action. It reacts off of what? It reacts off of this candle. I'm not looking at the market in terms of structure. I'm looking at the market in terms of liquidity, what's price reacting off of. And once it takes that area, I see that as my sort of BOS in a sense, if you get what I'm saying. Because also look at this from you can say a structural standpoint. I don't like to say it in terms of structure because structure, in previous communities or anything, it was kind of discretionary. I'm trying to make this as mechanical as possible to where you can see it and go on your chart and apply it yourself. So look at it from this instance, right? From this high, right? This is the last high before we taken out this low and also this low as well from the left. So I know that we could return back to this area here and have a sort of reaction. And look what we do. We have a reaction at that area. We trade to this low, we trade to that low, right? We respect it, we move away and we take the high. So as soon as the high gets taken, buyers get trapped. So if you look at the candle, pay attention to the candle, take the high first, trade above, buyers get trapped. So it's not a sense of me looking and picking specific structural points, param, and just saying I'm going to go off of this high instead of a swing point. I'm looking at what price is reacting off of, and I'm looking where these inducement highs and lows come from. So it's not a specific way of just saying we need a rule to look for candle wicks or structural points or swing points. It's me looking, okay, what was what was the point where sellers got induced from? Sellers got induced from here. So boom, that's move one. Two, could we potentially react off this area? Yeah, we could potentially react off this area because why? It's an inducement high. It may be a lower time frame inducement high because after all, like it may be a lower time frame inducement high. It could get confusing because you'll see a lot of inducement highs and lows on your chart chart. Because in reality, on a higher time frame, this whole move creates my inducement high, right? This high creates from this low. would create my inducement high. So yes, I know that I said I have another one on a lower time frame perspective, but we have to work our way up to get here in a sense. And that's me going from a lower time frame scale, just so you guys can actually start to understand what the higher time frames, I mean, what the lower time frame is doing, so you can, stay out of these, potentially bad trades or not. So look at this. Those are short here. As soon as this inducement high is taken, we have the build up here, your inducement high. You have liquidity block here. Inducement high gets taken. I would take the direct entry here, target the lows. That's it. There's no other liquidity to target in the market at this point, just because, like I said, remember on the higher time frame, we haven't built liquidity at these lows yet. We haven't truly built liquidity at these lows yet, because the market is seeing this as this whole area as an LB to react off of. Like I said, even though we took the high, we didn't take the engineer liquidity to the left. So price could still potentially go bullish. It could do either or. But since we know we have a bullish bias because we trap buyers here, we could potentially run to these highs. And then after that, I have no bias. So this is how you can frame something on a lower time frame. You find out where price is reacting from, it reacts from there, builds liquidity at the lows, and it takes the inducement. And then what do we have above? Liquidity block. That's from auto, just on a smaller scale. So now once we take liquidity, buyers trapped. Now you can see price start to trade in the bullish direction. Buyers get trapped. So we take the high. We react back from this area. I'll just grab this whole area because look at this buildup. Price is reacting off of that area. So I can grab structural point. We trade here back into that LB. We already used that LB. The target was already reached for that LB, so we no longer are going to trade from this area. So we react from it. We still see reactions from it. Notice how we touch it, get that little bearish candle, and trade above. So you get that like move up, inducing buyers. We want to see that low get taken. Low gets taken. Cool. So now we know we've trapped buyers now because early buyers were trying to get in this market. If you, as a retail trader, were trying to potentially, oh, I see a BOS in the market. Look at this. And this is just training your eyes to see like the little intricacies on the lower time frame. Just look at this, right? We trade into that POI. Look at that candle's reaction. Notice that candle's reaction. The next candle takes out that high. That does what? Induces buyers. Trapped. So now we can potentially see a move away because we had a buildup at this level. So whenever these buildups get taken, you can potentially see a reversal in the other direction. So what we have here, price respect this area. Price trades up. Look at this. Can't make this up. Price trades up here, takes that high, but we have a liquidity block here. Remember, we just trap buyers. We have a liquidity block. So candle one, candle two takes the high. That candle gets swept. As soon as that candle gets swept, you can take a buy. It's a high, in my opinion, high risk trade, a more not more advanced type of entry. It's harder to take this entry, but once you start to like notice what these candles are doing on a lower time frame scale, it's the same as the higher time frame. You respect the area, you induce buyers by taking buyers get trapped. You induce higher, taking that inducement high. We're still respecting this high to the left. So traders get trapped, early buyers get trapped, liquidity block. You either target this high or you target these areas that price is reacting off from that were inducing buyers into this market. So look at all this liquidity you have to target. You have this high here, you can target that area. You can also target these highs, but we're trading NQ on futures, so this is like probably the safest target in my opinion. just because we still have that build up, pressure turns back to it. So notice how we've taken this high here where sellers are getting induced from, and now we have this move to the downside. Now we need to generate more liquidity in this market. So that was just a depiction how you can use lower time frames to try to frame out some sort of entry, but you have to key in on where price is reacting from, and I go over this in every webinar. Remember, whenever we take out this low, we trap buyers, so there's no longer any selling. All these areas to the left should be used as catalyst. Catalyst meaning reactions. So now we use these areas as a potential reaction point. We should cause sort of false reactions in this market. Sellers are trying to sell this thing. So look at what we do. We react there, maybe a little lower, induce higher. So notice how we could potentially take out this low now because we had this buildup of price action. If you look at that. We trade here, trade higher, and we end up taking an inducement high. So since we ended up taking an inducement high, no buyers get induced. At the least, you'd want to see price below this low. At the least, and look what happens. Price comes back into it. Look at all this liquidity that got built. Look at all that. Trade back into it. Buyers get induced. Trapped. All these lows buyers want to buy from. You probably see this as a liquidity block just because these lows got taken. So buyers get trapped. You could potentially see some sort of move to the upside. Look at this. Inducement high is taken. Inducement high is taken. You want to see that inducement logo. You have a liquidity block here. Can't hear? Maybe I was just talking too low. Apologies. Hold on. Feels like I'm losing my voice a little bit. Sorry, guys. So inducement high gets taken. We're still in a bullish scenario because we trapped the buyers here after inducement high here. So everything's good. Okay, cool, cool, cool. Making sure, making sure. So we induce higher, right? At the least, you'd want to see this low get taken. We have a liquidity block below. Would I have taken a direct entry respecting this though? Not likely. Like I've been saying, I'd want to see price respect this area, then take out the low first. So I'd most likely look for a confirmation in this area. But in any event, if you have the drawdown to take a high risk entry, you're more than happy to do so, just because of price aligning with the direction, nonetheless. So PM potential entry there, and I would have been taken out. Like I said, normally you want to see the low to the left taken after the inducement high is getting taken because there's a BOS in the market. So if you were to even take that buy entry, you would have got stopped out because now there's liquidity below this low because we've induced buyers. So that's why I kind of like to not take those type of entries whenever you see this happen because we've taken the high out. Remember in previous webinars, if we respect this, then take the low first, high probable, take that entry all day, every day. But since the high is taken first, the buyers are induced. Once the buyers get induced, all price sees this as a buildup now. The buildup is here now. Elijah, isn't there a red candle 4 hour after sweep swept high from get some information that's clean first? So, because we don't have to Holy, I'm sorry, I don't even understand that question. I don't even understand that question. I'm so sorry. But towards the end, come back to me with some sort of question along the lines of that. Potentially answer that. I've got too far. I'd like to ask, since I drew up on NQ, aren't we inducing from the left? Surely we're inducing sellers from the recent sell-off. So I'm expecting some bullish reactions. Surely we induce sellers from the recent sell-off. So I'm expecting some bullish reactions. However, the lows look good too, yes. Are they are the liquidity block protected? Can you just scroll to the left to the 1 hour 15 so I can see? If you're talking about these lows, it's hard to say. It's very hard to say because sellers have not been trapped yet. Sellers to the left have not been trapped yet. So what I would say in this general instance, since we have liquidity above here and we also have liquidity at the lows, but in this instance, since we haven't induced higher, induced buyers on this time frame, look at this. Since buyers haven't been induced above here, sellers haven't been trapped. So I cannot for sure say that there's liquidity below this low. All we have done is just reacted from this liquidity block, traded in here, and now we're having a build up on both sides. Price could take either side, but from my point of view, we haven't trapped sellers, so therefore there's no liquidity at these lows until we trap sellers. So 24,639 was what you're looking for. Yeah, trust me, we all were, but sellers haven't been trapped yet. We just take an internal point in respect to the high, so price could go either way. Um, yeah, so price takes out that low trapping buyers, and then we see how we have to move up. So whenever you look at this, right? Remember, this is how you avoid the losses. Whenever you see that inducement high get taken instead of respecting. And notice how there's an LB right here too. Like notice how there's an LB there too. Price respects that, sells off. That gives price reason to sell off too. Because that's basically the model. If you look at it from this instance, inducement high gets taken. Liquidity block above. We have a build up here. Buyers are getting in this thing. Once buyers get induced, right? Once buyers got induced, wouldn't retail want to buy this? Once that target is reached, this whole area becomes a buildup. The market needs liquidity to target. The market needs liquidity to be built first, though. So chances are when you can't identify where the liquidity is, that's when you become it, and this is what happens. So remember, we like to see this happen. So we need to see price respect those areas before. Holy shit, that was a terrible drawing and terrible example. So imagine we are trading higher, how to sell off. Okay, cool. So you have no bias here just because the lows got taken. You need to see liquidity be engineered in the market. And that's a very important thing that's pertaining around this strategy. If there's no engineered liquidity, there's no reason for us to be trading because there's no target in the market. You just have a high to a low, framing out, okay, we've induced sellers. What then? We need to see some sort of liquidity get engineered into this market. So we trade above here. I mean, not above here. We trade into here. We're stuck in that area. Now we trade lower. Okay, cool. Imagine there's internal taking here, right? On a lower time frame or whatever the case might be. Okay, so internal just got taken. Now sellers got induced. Now we have engineered liquidity at these highs. And that only constitutes because we've induced sellers somewhere in here. So liquidity block there, we respect it. Price trades up. As that creates some sort of inducement high, right? And look at what we do. We respect the high as well. Cool. We don't want to be trading from this. Buyers just got induced. Retail's looking to trade that. We want to see that sort of build up happen. We induce buyers by taking some sort of internal. Cool. Trap. Boom. Take that entry because you have all these highs to target. Boom. And that's how you save yourself from taking, these losses. You want to see price respect the high, not it take it. Because once this high gets taken, it gets a little bit lower probable after that. You want to see these highs get respected. Same if it were lows. I've been on NQ this whole webinar, guys. Like, I'm sorry, like we need to go over other shit. We need to go over other shit. So let's go over gold. Let's actually go over the futures chart. So what we can see on gold, we had a bullish target, just like this, right? We even do sellers, but we know we're bullish on a high time for fine. Oh my god, I wish I can edit this. I can't edit this, unfortunately. For the people in the recording that hear that, that's terrible. So we can do sellers, but we know that we are in a bullish market environment. So we need to engineer liquidity to get to these highs. We can't just push up after this. So notice how price does this. Every time we see price induce sellers, we're inducing sellers off of price action from the left. So notice how we reacted off of that. Sellers got induced. Now we have a target to the highs. We react. Look at this buildup that got created. Gold is a different. Gold is just different. I don't even know how to. Sometimes gold makes me feel like I don't know how to trade sometimes, bro. So that's all I can say about gold. We even do sellers, leaving more liquidity at these highs. So look at this. This is almost a similar scenario of NQ, right? We respect, notice how we're respecting the liquidity from the left, right? We induce sellers and we take out the internal point, but we don't. We didn't take out the inducement from the left. So sellers weren't fully trapped yet. So just because we taken out internal, look at this. Boom. We sell off, right? So same scenario NQ's in. We still have that liquidity at the highs that has yet to be taken, but we just took internal. Price could still have the potential to go back up. Look at that. So price induces sellers again after reacting off of sellers here. Does this, I don't know what it reacts off of here. It just reacts off of this POI or whatever. Engineering liquidity, sellers are selling that. And now we have a move to the upside. Boom, trapping all these sellers on the upside. So sellers get trapped. This is where sellers were originating from. You can obviously see it here. Magnet work, please. Magnet, please. Okay. Notice how sellers are trapped there. Jesus. Okay, we're gonna leave it there. So notice how sellers are trapped there, literally. Look, notice how we had that pause and then a move up, and then price just bearish momentum there. So you can easily see that, hey, okay, this is my inducement high, but there's no reason. Once we sold off here, there's no reason for us to go here yet. We need to build that story like how we do with this price action all in here. We need to build that story like how we do there to get up there. So just because we have an inducement high doesn't mean we can get there yet. We need to start building liquidity at these inducement highs. So the framework of the strategy, I want you to look at these inducement highs, right? Here's your homework. Look at inducement highs, identify them, and see what happens, right? Like this. You want to identify these buildups that happen after we react off of these inducement highs and lows. Notice what happens. You react from it, you take out some sort of internal that creates a buildup. Look at that. This internal created a buildup. Why? This is inducement low. We induce buyers. Created a buildup. Boom. Notice how buyers get induced to trapped. How do you determine which low high is a true inducement low high? It's not gonna be a thing of this is the true inducement high or low. This is not the so if you're trying to figure out, okay, this is the draw on liquidity, right? So let's make it simple for you. We induce the lows here. So we have an inducement high here. That gets taken. We see a sell-off now. We have an inducement low here. That gets taken. We see a bullish move up. But we still have a draw on liquidity. The draw on liquidity is these highs because this is where sellers got induced from. But we have to make our way up there. So essentially, this would be my inducement from the left, yes, but there's inducement highs and lows all over the market. They get created every time sellers and buyers get induced. So a new inducement high gets created here because we just induce sellers, but we still have a structural high here. We can't take that structural high yet just because we've taken the inducement high. We potentially would build up, have some sort of build up. We need a reasoning. We need a reason to take this high, and that comes from reacting off of this level, inducing sellers in this area or whatever the case may be, and taking out the high. So, like I said, you just want to look for where price is reacting off from and notice these whenever liquidity gets taken, like in this, for example, from that high to that low, that creates an inducement high. You can expect reactions there. You don't want to be taking sales from there. And notice how you have some sort of buildup. Sellers are trying to sell that. So focus on immediate liquidity grabs. Draw with the liquidity in mind. I don't want to put it. I don't want to say that because then you could get so zoomed in without factoring in higher time from direction, right? So I want to say, think of it like this, right? Let's replay it. So picture you don't even know where gold's going, right? So since I don't even know where gold's going, I don't have that target in mind. I just have this is the only information you're working off of. You have to go off of the information that's given, and that's why we say you have to react to what price is doing. Yeah. So this is what happens. We do sellers there. Okay, that's pissing me off. So just imagine that low gets taken. So this is the only thing we can go off of. This is the only inducement high that we have right now. And notice how we create some sort of build up from that price action. Cool. And we had a sell off, taking this build up here. So after we've reacted off of these highs, we traded up. If you want to really refine this, you can refine this to here. But this whole area is an inducement high on a higher time frame. We're just really refining this area. We had a build up here. Price is reacting off of this candle. Notice how it induces sellers. Price trades back into it, and now we induced again. So you can just, if you wanted to refine it, price was reacting off of that area to generate liquidity. This one is like real life retarded. So notice how we had a build up above here. We're taking these highs, respect, high taken, respect, induce, and then we finally trap them. So notice how the build up area gets taken. So once that build up area gets taken, we've trapped buyers and induced sellers. So sellers got induced. Now we want to find a way how we can get in the market. Easy. I can see it without even going lower. So look at this. We induce higher and induce lower. And we have what here? LB, you buy there. There's a buy opportunity there. Higher time frame buy opportunity there. Just target the inducing high. Literally, This is if you notice this, if you watch like the older content like 2024, 2025, you see a lot of trades get taken like this, induce higher, induce lower, but the inducement high is still intact. Inducement high is still intact. So we go over it. Boom. Yes, yes. In my opinion, I feel the same way, Luca. I feel the exact same way. Um, my data says the same thing too. That's why I said some sort of some direct entries can be high risk. That's why you don't use the same risk whenever you take them. So that's cool. That's to answer your questions on gold at that. There was a trade. I wanted to actually go over that, but we've been so locked in on these questions. So once gold did this, right? We've taken out the sellers that got induced from the left. Cool. Now we have an inducement low target. Inducement low gets taken. So once that happens, we induce sellers into the market. So now we're looking at it from this scale. Remember, this is the only price action we see. Now you have an inducement high in the market, and that's here. That gets taken, but we still induce sellers. So we do not want to be selling above here. We do not want to be selling this area here. And I've seen people in the group selling this. I get it. You see an inducement high taken, you see a liquidity block, but understand we've induced sellers. We've had a breaker structure. This area is going to generate liquidity in the market. So we take out the high. This gold price action was actually kind of good actually. So what we had here, we respected the high. Price trades up, induce the sellers now. Induce sellers creating LB. You have this inducement high, inducement low, sorry. We respect this area. Yes, this inducement low indu takes out this high, inducing buyers, but notice how we engineer liquidity here. We engineer liquidity there, and you have a liquidity block below. There's a buy opportunity. And it's the same scale. This price action is the same as the higher time frame price action on the left. You take the inducement high. You don't want to be selling from this area. You don't want to. This area is just going to generate reactions. You target that area. Boom. Sellers get trapped. Now price aims for liquidity in the other direction. All right. Do you guys have any questions? I feel like I touched on enough in this webinar. I touched on a lot in this webinar. This was gold. 5, 4. Have a safe flight, bro. Appreciate it. Thank you. Try my best to articulate the information in which ways you guys can understand it. Um, Pre-tap, if you ask a question in the question section, I can do a drawing for you, but not in the webinar. Thank you. Appreciate it, man. Thank you. Oil for the appreciate it. So after BOS, do I always need to see the top taken out? Yes, it's not gonna always get taken out, but you do not want to be trading from that area is what I'm trying to say. Like, since we had this BOS here, yeah. Notice how we had that build up BOS, sellers get trapped. Sellers get induced. You don't want to be taking an entry where you would see this as a LB here. You would see this as a LB here, but in any case, look at how we just respect and keep going in an intended direction. Much love, much love. Once inducement higher low is taken, breaker structure, we need to wait for price to build up, sharing price. Enter retail POI. Um, I can kind of rephrase that for you. You want to see price get induced. You want to see price return back into these areas, inducing retail into the market before the inducement high is taken. So take the entry in the intended direction. Like here, you have your inducement high. Notice how we trade into that, respecting it, inducing sellers move away, respecting move away. We take out the internal or inducement low, and you have liquidity block below. Sometimes it won't be as clear as the drawings, guys. You gotta understand it, and that's just the name of the market. But I am signing off, guys. I appreciate you guys for coming through, and I'll make sure to get the recording uploaded as fast as possible. So I will see you guys on Monday. No problem.